Welcome back to my channel Accounts Accuracy. Let's understand the solved specimen question paper of ISC Accounts 2021-2022. Now here, as we have already done question 4th one number, so let's start with the second question of question 4. The question says Naresh, Dhruv and Ajim are partners sharing profit and losses in the ratio 5:3:7. Naresh retires from the firm. Dhruv Ajim decided to share profit in the ratio 2:3. That means this is the old profit sharing ratio, and Dhruv and Azim after the retirement of Naresh is going to share his profit, that is 5/15 in the ratio 2:3. The adjusted capital of Dhruv Azim at the time of Naresh retirement showed the balances 33,000 and 70,500 respectively. The total amount to be paid to Naresh is 90,500. So this much amount Naresh is required to be paid, and that too in cash, because he was paid immediately. Cash was paid immediately to Naresh on his retirement. So 90,500 was required to be paid to Naresh at the time of his retirement. And in the question it's been mentioned the available amount of cash which was available at that point of time at the time of retirement of Naresh was 20,000. So it can be possible that this 20,000 will be utilized to pay the amount of 90,500 to Naresh, but as the company needs to maintain a balance of 5,000 out of this 20,000, so rest 15,000 can only be paid to Naresh, and rest 5,000 cash will be maintained in the business. So Dhruv and Azim needs to bring the rest amount to pay to Naresh, as there is no sufficient cash available to pay to Naresh. So let's understand it here. You can see Dhruv and Azim's capital at the time of Naresh retirement was 33,000 and 70,500, which is given in the question itself. These two total will be 1,03,500. So this much is the amount of capital which belongs to the continuing partners at the time of retiring partner. Now the shortage of amount, as I already told, that will be 90,500 minus 15,000, because 15,000 amount of cash can only be utilized and 5,000 was required to be maintained out of 20,000 rupees. So that will come out to be 75,500. So this much cash is not there in the firm at the time of retirement of Naresh. Only 15,000 was the available amount of cash which was there at the time of Naresh retirement, as they are going to maintain rest 5,000 in the balance sheet. So the amount 75,500 which will be needed by Dhruv and Naresh will be added to their old capital. Then it will become 1,79,000. Now this 1,79,000 is the amount of capital of the new firm, because they are required to bring some extra cash to pay to the retiring partner. As the total capital of the new firm increased, hence the new capital of Azim and Dhruv will be maintained in the ratio 2:3. So new capital 1,79,000 is required to be divided among Dhruv and Azim in the ratio 2:3, which will be 71,600 in case of Dhruv, because 1,79,000 into 2/5, and that will come out to be 71,600. And in case of Azim, 3/5 into 1,79,000 will come out as 1,74,100. So this is the new capital which they need to maintain, as they have to pay the amount by cash to Naresh at the time of retirement. But their old capital which was given in question was 33,000 for Dhruv, and for Azim it was only 70,500. So the difference between the new capital and old capital of Dhruv is 38,600, whereas the difference between the old capital and new capital of Azim is 36,900. So these two amount they will bring in order to pay to Naresh at the time of his retirement. So here is the journal entry which will be passed at the time of Naresh retirement, that is Naresh capital account to cash account. Debit the receiver, credit what goes out will be 90,500, and as he was paid only cash amounting to 90,500, the rest amount 75,500 we just calculated, that will be paid by Dhruv and Azim, credited from Dhruv's and Azim's capital account respectively, and the amount will be shown in the books of account as cash account debit to Dhruv's capital account and Azim's capital account. So this is the way you are going to show the journal entry at the time of retirement of Naresh, because these two values will be brought in by the continuing partners to pay in cash at the time of retirement to retiring partner Naresh. Now let's come to next question, that is question number 5. In this it's been given that Ravi, Vijay and Sujay were partners sharing profit and losses in the ratio 1/2 is to 1/3 is to 1/6. Vijay decided to retire and his share being taken up by the remaining partners in the ratio 1:4. Now as Vijay, that is 1/3, this share is going to be divided among the rest two partners, that is Ravi and Sujay, in the ratio 1:4. On Vijay's retirement, a loss of 12,000 was determined upon the revaluation of assets and liabilities. You are required to calculate the new profit sharing ratio of the remaining partners. So here we need to calculate the new profit sharing ratio, and as you know, new profit sharing ratio is old ratio plus gaining ratio. And then other thing which we have to do is to pass the journal entry to write off the loss of revaluation of assets and liabilities. Now as loss is 12,000 which is required to be written off. So let's see how it will be done. So here the old ratio of the three partners were 1/2, 1/3 and 1/6. So when we will take the LCM 6, it will change to 2 into 3, that is 3/6. It will become 3 into 2, that is 2/6, and this is already 1/6. So the old ratio will be 3:2:1 if we will take the LCM as 6. Vijay's share is going to be divided among Ravi and Sujay in the ratio 1:4, that is 1/5 for Vijay, 4/5 for Sujay. Now here Vijay's share, that is 2/6, will be divided among Ravi and Sujay in the ratio 1:4. So what will be done? Ravi gets Vijay's share as 1/5 into 2/6, that is Vijay's share will be Ravi's new share, that is 2/30. So this gain of 2/30 will be added to the old ratio of Ravi, that is 3/6. In 3/6 we are going to add this gain of Ravi, that is 2/30. So new share of Ravi will be 17/30, as we are going to take the LCM as 30. So 6 into 5 is 30. So 5 will also be multiplied with 3. So that will be 15 plus 2, that is 17. Now in case of Sujay, what will be done? The same thing will be done. Sujay gets out of 2/6, 4/5 portion. So the gain of Sujay will be 8/30. Now as 8/30 is the gain of Sujay, so new share of Sujay will be his old share plus gain. His old share is 1/6 and gain is 8/30. So his new share will become 13/30, as we are going to take 30 as LCM. So 6 5s are 30. So 5 will be also multiplied with 1. So that will be 5 plus 8, that is 13. So 13/30. The new share of Sujay and Ravi is 17:13. Now as revaluation is 12,000, so this needs to be written off, and for that what will be the entry? The losses will be divided among the three partners and realization account will be credited, and this will be done in the old ratio, and old ratio of the three partners are 3:2:1. So that 12,000 will be divided among the three partners, Ravi, Vijay and Suzay, in the ratio 3:2. 12,000 into 3 by 6 will come out as 6,000. 12,000 into 2 by 6 will be 4,000 and 12,000 into 1 by 6 is 2,000. Now that's all for today. For understanding rest of the question, you must watch my next video. And please don't forget to subscribe my channel and hit the big fat like button. Thanks for watching.